Hang Seng is the one which is down around 0.1%.
I can only confirm that the conversation has happened with the department.
The IT index, well, that could rebound today. The Nasdaq was an outperformer after a few sessions out there.
In 2 years' time, we will make $4 billion payment.
High wheat and milk inflation will impact margins.
The windfall tax in crude petroleum has been hiked. It's a small hike that has come through, 4,400 rupees per ton versus 4,350 rupees per ton.
Nifty is up about 90 points, 100 points now almost, 95 points.
I think we continue to be conservative for first 6 to 9 months.
Macquarie has initiated coverage with an underperform rating and a target of 115 odd rupees.
They have acquired Unison Enviro Private Limited for 531 crore rupees. This is an all-cash deal.
Loans don't turn bad overnight. There is a steady decline in the financial health of the borrower. And so as a bank, as you start realizing this decline in health, you should start providing for it.
We followed it up with a near 200-point gain on the Nifty.
The company has got a notification of award, and this is for building of Discom infrastructure as far as Bihar is concerned.
In everyone's heart, the fear of having something to cover, that was a big step forward.
Has been steady for the Nifty, up 150 points.
Good afternoon and welcome to Closing Bell from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Surbhi Upadhyay, and in the newsroom we've got Nigel. And wishing all our viewers once again a very happy and colourful Holi. Though the colour on the screens is clearly green and the markets, Surbhi, are celebrating. We have come off a bit from the high point of the day, but still it's a near 1% rally on the benchmark indices. The Nifty today opened at levels of 17,680. It was a gap-up opening of about 80 points, but from there, we added on another 100-odd points. Just in the last, maybe second half of the trading session, we've come off a tad bit. So the high today was 17,800. We're currently at 17,740. So from the top of the trading session, we've slipped about 60 points. But again, it's not too much because you need to see today's gains in combination with what happened on Friday. Friday was a powerful 270-point rally. And to that, we're adding another 80 points, 140 points. So given all that, the little bit of a skimming off of the gains through the course of the day is not very significant. The mid-caps are moving in step. The mid-cap index is currently up close to about 1%. Just keep your eye on the banks. The banks today have come in for a fair amount of profit booking. The Nifty Bank has slipped nearly 300 points from the top of the trading session. The Nifty PSU banks have completely given up all their gains from the top of the trading session. The Nifty PSU banking index is down close to about 1.5%. And today we've got the Nifty financial Nifty expiry because tomorrow is a holiday in the Indian market. The Adani Group stocks are also telling you a story of profit booking. So pull up the intraday chart of an Adani Enterprises, Adani Ports, Ambuja Cements, ACC. Significant cool-off from the top of the trading session. For Adani Enterprises, the high today was nearly 2,135. From that level, we're now down to 2,000 rupees. Of course, things have recovered, stabilized in the last 2 hours. But from the top of the trading session, that big, robust rally that we had in the first half has given up. And some of those gains have faded, even in names like Ambuja Cement as well as ACC. On the losing side, a couple of these cement names are weak. Tata Steel, JSW Steel. Britannia, of course, is the top Nifty loser. And on the gaining side, ONGC, Reliance are batting for the bulls. But all in all, it's a fairly buoyant-looking screen today, Surbhi.
Oh, absolutely, Reema. I think the bulls are going to take this with both hands. They had Friday. They've got a follow-on on Monday. I think the bulls will say we've seen enough of the color red. We're happy to go into Holi with the color green this time around. So it's working out quite well. Yeah, some minor sort of shaving off from the topmost levels of the day. But it's kind of a good feeling across global markets as well. You've got gains across most of Asia. European markets, FTSE is a little flat, but the CAC and DAX doing okay. You've got gains around, 0.3%, about 0.5%, depending on which index you're looking at. The futures are holding up. The dollar is not rallying. The yield, the US 10-year yield is fairly calm for the time being, just holding below that 4% handle. So markets across the world really seem to be in a bit of a, relief slash, hopeful mood, at least until we get to the jobs report, which comes in on Friday, and that's going to be the key litmus test. But up until then, I think the bulls will try and prevail and just watch out for the next big data points. Right now, this is a pretty decent looking screen. By the way, once again, a lot of the PSU stocks are doing very well, and we'll talk about that as we go forward. You've got some of the names on the fertilizer side of the screen that are really bouncing today. NFL, even the smaller names like Madras Fertilizer. So interesting moves in the mid-cap market. The mid-cap market has held up very well. The market breadth is solid. The difference between Friday and today is that Friday was more of an Adani reaction / PSU banks. That was the big move. Today, this is a far more broad-based market, cutting across sectoral indices, cutting across market capitalization levels as well. So mid-caps performing, large caps doing well. I guess it's a pretty decent-looking screen if you are a bull. Nigel, hi.
Well, earlier this morning we pointed out that the Nifty IT index could be the index of the day, and that's played out right perfectly because the IT index is up close to 100%. It was underperforming in Friday's trading session, and we did have a good recovery on the Nasdaq. So that's the way that's played out. The problem is the Nifty Bank. Well, we went all the way to around the 50 DMA. We went closer on that 41,680 odd. So the 50 DMA is proving to be a near-term resistance level. We almost got to that level, but we have U-turned. We have corrected close to 300 points from those highs. The other problem is the 17,800 call. That's the highest open interest because that has the highest open interest and the premiums around 50 rupees out there. That's why that 17,850 odd is likely to be a bit of a resistance level. And that perfectly coincides, right? If you're looking at the 50 DMA, well, it's at around 17,857. So 17,800 from where we U-turn today and 17,850, that's a bit of a resistance zone. However, we are seeing some signs of put writing even today. The 17,700 put on the call side, the highest open interest is at around 17,800, but on the put side, it is at around 17,700 put. So there is a sense of writing out there. So the bulls will feel at least by the end of today, we can defend that 17,700, 17,720 odd. It'll be pretty good. Following up the big rally that we saw on Friday's trading session with a decent move today. And as Surbhi pointed out, the broader market outperformance is something that the bulls will like. Surbhi?
Okay, great. So, so far so good. Nigel, let's kick it off then. We've got a packed next 60 minutes coming up. So let's tell you what's lined up on the show today. Well, to start things off, Mahanagar Gas has been surging around, and this is on the back of an acquisition the company has done. It's the company's first ever acquisition, and the market is loving every bit of it. We'll get you all the details. Gail is also trading higher. Details on what's aiding this up move coming up. Britannia, on the other hand, is the top index loser, lending some red to the screen. This follows a downgrade that came in from CLSA. We'll tell you what that brokerage is saying. Lots of market talk coming up, also stock-specific action. Mithun Aswath of Kiva Advisors joins us later on the show. All that and more coming up in the next 60 minutes.
Let's find out how you should position yourself for the last hour of trade. Mitesh Thakkar of earningswave.com joins in now. Mitesh, are you disappointed that we've come off from the top of the trading session? We couldn't quite get to levels above 17,800, inch towards our 50-day moving average? Or would you take this minor shaving off from the top as a part of, the overall consolidation after two big days?
Good afternoon. So not at all disappointed. In fact, we were highlighting that this level will act as some kind of a supply and profit booking should be done here. Let's look at these 3 points. I have highlighted this that on the 22nd of Feb, we got a gap down, which was in the 17,800, 17,780 zones. Then if you take the high of 16th February, which is 18,134, to the low of 17,255, the 61.8% retracement is about 17,798, and then there are a couple of moving averages around the 17,800 mark. So, as you rightly pointed out, after 2 days of rally, I think there's a very strong chance that we will see some profit booking happening here, given the fact that we also have a holiday tomorrow. So nothing surprising, but that still doesn't change any kind of, or that doesn't bring any kind of change in the directional bias. The hourly and the 2 hourly charts still suggest more of positive traction. And until we break 17,600, I think I'll be long. So the idea is that now if somebody wants to buy it, I think the entry point should be closer to about 17,700, 680 zones, and 17,600 becomes your positional stop loss. But very clearly trade with long bias. I do expect that after maybe, because there are multiple supply pivots around the 17,800 mark, it might take 2 days of consolidation, maybe 2.5 days of consolidation. But I think eventually there's a stronger chance of us breaking on the upside in the short term. So buy on declines remains the strategy. And on the stock side, I think very clearly we are looking for more of long positions.
Okay, Mitesh, hi, good afternoon. Let's get to the picks as well. What are you working with today?
Yeah. So, good afternoon, Surbhi. I have a buy on Tata Motors, and that's a buy with a stop at about levels of 432 and a target of 455, 460 on the upside can be looked at. And the other one is NTPC, which I would recommend buying with a stop at 174 and a target of 185 to about 188. And I suspect eventually it might go much higher because NTPC is now getting into all-time high levels. The highest closing which the stock has had was around 180. But this time it looks like it will clear that, and therefore 185, 188 should be the immediate move post getting into new high, that the momentum jerk. But I think eventually we are looking at 200 plus levels here.
All right, got that, Mitesh. Thanks very much. We'll come back to you in about half an hour. We'll see how the market holds up until then. Right now, an important exclusive story before we move ahead with the rest of the market action. We're learning from sources that Axis Mutual Fund is all set to get a new chief investment officer. The move is coming just days after SEBI took very stringent action against 21 individuals on allegations of front-running. And this could be seen as the fund house's effort to instill greater confidence in its investment team. Shivani Bajaj is here with this exclusive. Shivani, this is a very interesting developing story. Tell us what you're learning.
As SEBI continues its probe into Axis Mutual Fund front-running case, industry sources confirm that Axis Mutual Fund has roped in Ashish Gupta, the former India head of equity research at Credit Suisse, to join in as the chief investment officer. This is the same Gupta, Ashish Gupta, who was the key person in highlighting the extent of non-performing assets in Indian banks back in 2012. Industry sources tell CNBC-TV18 that Gupta was roped in by the AMC in November 2022 and was supposed to join the AMC in February. Sources say that Gupta will be joining as the CIO of Axis Mutual Fund within a week. As of now, Axis Mutual Fund does not have a position of CIO, and Ashish will be the first. With Gupta coming in as the new CIO, there will be another senior executive to oversee the investment operations between CEO Chandresh Nigam and head of equities Jinesh Gopani. This comes just days after SEBI had released an interim order barring 21 individuals, including Axis MF's ex-fund manager and chief dealer Viresh Joshi, from the securities market in the front-running case. The SEBI probe in the front-running case has been on for at least a year, and the final order is awaited.
Okay, thanks very much, Shivani, for that. Indeed, Ashish Gupta is a very celebrated name in terms of the
name, right?
Yeah, in terms of the equity circles, and he's regarded as a a very, very respected analyst as well. So let's see if Axis can indeed get this moving quickly.
House of Cards, right? That was his marquee research because of which he shot to fame. And he had stepped down in November last year after serving almost 14 years in Credit Suisse, a big trusted name in the equity market. And now we understand he'll be joining Axis Mutual Fund. Let's get in some comments from Deepak Shenoy of Capital Mind Deepak, your thoughts on this particular development?
Hi, Rima. I don't really know what to say. I think the SEBI order doesn't actually put anything negative on Axis Mutual Fund. It's largely about a rogue dealer who was able to do what he did because in COVID, people were working from home and therefore the controls that would have been there in an office environment weren't available. He did some synchronized trading where, using multiple accounts and all that stuff doesn't reflect badly on Axis Mutual Fund at all. So I'm hoping this is, not reactive to that order, but more about, Mr. Ashish Gupta has his own credentials. So I think any mutual fund in the country would be, would be happy to have him on board. So, in that context, it adds heft to the Axis equity team. They've been stellar in the last few years, last 1 year, 1.5 years. I think a lot of changes have happened. But before that, Axis has been one of the best performing funds. Even one of the mid-cap funds has been really good in terms of performance among the top in multiple time cycles. So I don't think, the case that SEBI has given an interim order on, reflects, this particular development.
Okay, all right. Deepak, I want to ask you about a couple of other stocks that are moving around. Well, we highlighted this piece on Friday that we're bracing for very, very, hot summers probably, going by the SkyMet predictions. And this, obviously, it's not good news for all of us. But if you look at potential beneficiaries, and top of the list would be the direct beneficiaries, the AC makers, the coolers, and the likes. But, JSW Energy from the energy pack, from the power producers, the Gencos, they have close to 18% that's not tied up. In the month of March itself, JSW Energy is up close to 13%, and we're just getting started. What's your sense on this space, on the power space, and also JSW Energy, if at all, any view?
So, Nigel, no views on JSW Energy. My thing on the comment on the, the the heat part of the cycle is, it's going to be 3 months. So 3 or 4 months. I don't think that should warrant a massive change in investor interest. We are an energy short country in general. So I think in general, anybody in the power game should see higher demand. However, in the past, we've seen this sector is riddled with inconsistencies and, lots of working capital, because the people who are supposed to pay you don't pay you on time, and therefore your capital gets stuck over time and so on. So in a higher interest rate environment, I expect more capital to be stuck and working capital cost to increase across the board. I don't have a specific view on JSW Energy. I think there are risks in the sector per se. I don't have an analysis of it either, so I don't know how much or how little it will benefit from a short-term heat wave. But if power companies are to be evaluated, they should be on 5-year or 6-year cycles. One summer is not going to change their, their economics for the better. So I think, if anything, the summer might bring some respite, but the interest rate cycle, which is more longer term in nature, is a bigger threat here.
Okay, do stay on, Deepak. We want to get your thoughts in on Mahanagar Gas. Now, that's practically re-rated with an 8.5% up move after the company made its maiden acquisition of Unison Enviro. Sonal is here with the details on this transaction. Sonal.
Thank you so much for that. Well, it is a big step because it's the first inorganic step which the company has taken, and it takes away from the issues regarding volume growth for the company as well. To give you the news, the company has gone ahead and acquired Unison Enviro for 531 crore rupees. It is an all-cash deal, and this is the city gas arm of Ashoka Buildcon, the other listed company as well. The company says this is done in order to expand their inorganic portfolio and get access to more geographical areas as well. Now, this particular company which they have acquired has access to 3 geographical areas comprising of Ratnagiri, Chitradurga, Latur, Osmanabad. So basically it is over Maharashtra and Karnataka. In terms of financials, for FY22, Unison's revenues were 89.5 crore rupees. They did make a loss of 25 crore rupees, but over years those losses have been contracting for the company. ICICI Securities says that these areas provide some exposure to both industrial and commercial segment, and that's the reason each of them could contribute around 0.2 to 0.25 MMSCMD individually to the volume portfolio. And by FY28, with further expansion and investment that Mahanagar Gas will put in here, this can add 1 MMSCMD to Mahanagar's volumes, which were at 3.5 MMSCMD in FY22 itself. Citi has a buy rating on the stock with a target price of 1,030 rupees per share. They do call it an expensive acquisition, 6.4 times trailing price to book, but they are positive on this one. It could be a good use of cash by improving MGL's growth outlook. It is still at an early stage in terms of growth, but they can scale it up further, and it also takes away from the perception around MGL that they are lacking growth aggression. So this answers that, plus additional volumes that will flow through will be positive for the company.
Okay, all right, Sonal, thanks very much. That's a very interesting perspective. Let's take that to Deepak. Deepak, hi. So, are you convinced? Sonal's explained a lot of the positivity that surrounds this acquisition. At this price, MGL, does it make sense to you?
Honestly, no. Surbhi, I personally, I don't get it. Maybe I'm not. I haven't got deep enough into the economics, but it seems to me that they're buying a company whose turnover is 100 crores, less than 100 crores, for about 530 crores. And the total turnover of Mahanagar Gas is about 5,000 plus crores. So this will add like 2% to their overall. Of course, they would invest more money in it, but that's like that's not saying much. They're getting 2% extra turnover for 530 crores, and then the stock's up a significant amount. So I don't see the economics of this deal being so attractive that this company. I mean, it's a low PE company, so therefore, yes, you could reevaluate upwards, saying that there's some growth dynamics that might come in. But that is perhaps more the feeling now, that there is actually an effort to do towards growth, rather than being just a boring utility company that they've been perceived to be in the past. This deal itself may not be so much of a game changer for them.
Okay, take your point on board, Deepak. I guess, I mean, one section of the market just feels that these geographical areas in Karnataka and some parts of Maharashtra, as Sonal explained, eventually, if they manage to scale up over there, get more customers on board, then obviously that revenue number, which is pretty minuscule right now, maybe that could look better. But take your concern on board as well, absolutely. Nigel, over to you.
All right. No, I think, Surbhi, what we could do is we could slip into a short break. You come back, we'll get chatting with Mithun Ashwath of Kiva Advisors. He'll be joining in to give us his view on the markets. He'll also talk about a couple of stocks. Stay with us.
Welcome back. You're with us on Closing Bell, and we are looking at the next set of stocks that are making it to the headlines today. Gail has been trading higher. Sonal is standing by with details on the up move. Sonal, I know there's been a lot of chatter around this potential tariff revision for Gail, right? What's the latest?
The latest is that today is the day when there'll be an open house where the participants, the stakeholders, all of them will come together and finalize the tariff rate as well. There are consultations which will continue, and just after this, we will get the final rate of tariff as well. So today is an important day in terms of the tariff hike timeline as well. Now, we have been pointing out how PNGRB said that they are looking at $60.9 per MMBTU as the final tariff in terms of unified pipeline, and we do have some of brokerages which have come out with notes as well. Jeffrey says that proposed tariff could raise standalone EBITDA by 15%. So they are very positive, and this hike is much higher than what they had anticipated. Post-tax ROCE will remain at 5%, ruling out large multiple expansions, and fair value for the stock would rise to 110 if proposed tariff is finalized. They have a target price of 90 rupees per share right now. CLSA has also come out with a note. They have a buy rating with a target price of 125 rupees per share. Indication, of course, raises hopes, according to them, of a 50% hike that will come through. Final tariff order is likely any time after today, and they are modeling a 40% hike, while 52% hike would boost FY24 EPS by 7% for the company. Higher share of stable utilities earnings would also drive a re-rating. So a lot of macros also in favor of Gail right now in terms of lower gas prices, petchem margins. They have bottomed out in Q4. All of them are working for Gail. Additionally, this tariff hike would come in as the other kicker for the company.
Sonal, thank you very much for explaining that, while we will await the final tariff order. Deepak, do you think this can be a significant re-rating trigger if it plays out as per market expectations?
So prima facie, it does. Rima, I don't have an investment in Gail or much in the gas space right now. I think we'll look at it after after the news comes through. Given the dynamics, I think this is like the cost of your output is actually being determined by effectively the regulator, and therefore your profits and your losses or your losses, they are effectively in the hands of a regulator who will determine how much your deal will go through. So that way you don't want to pay too much for a company like Gail. But they may make supernormal profits in some years. So I think a short-term investment may make sense, maybe a 1 year or 1 or 2 year if things go the right way. But I don't think this would be a long-term play or a long-term hold for us, even if we decide to get him.
Okay, all right. Deepak, thanks so much for stopping by, giving us your view on the whole host of stocks. Wishing you a good holiday tomorrow and happy Holi to you, your team, and entire family. Well, let's move on then. Mithun Ashwath, Managing Partner of Kiva Advisors, joins us on the show. Hi, Mithun. Always good hearing your thoughts. Thanks so much for joining in. But, before we get to the markets and the macros, we are searching for stock ideas. And I believe there's one such stock that's on your radar. Fill us in with more details on that, which is that one stock that you can discuss.
Yeah. Good afternoon, Nigel. I think over the last couple of months, we added to one of these ideas, a company called Trend. This is basically a Tata Group company focused on private label retail. You would be familiar with the brand Westside that they have, but they also, a few years ago, launched a brand called Zudio. And that is something that we think can grow very well over the next few years. because the target segment that Zudio caters to is much larger. So from tier 1, they can expand to tier 2 and tier 3 cities. So we actually see the company's growth being driven by the expansion in Zudio. So our sense is from the current stores that they have, about 330 stores, they could expand to about 580 stores over the next 2 years. So it's about 125 stores per year. And the revenues of Zudio on a standalone basis would be around 40% of overall revenues, which would cross over 50% in the next couple of years. So we think this is a good way to play the retail story in India. It's from a credible group, and I think they have got their act together in terms of this format.
Mithun, any other ancillary companies in the retail which catch your fancy? And hospitality is another sector where you believe the valuations, the risk reward is attractive. What's the best way to play it?
Yeah, so I think we've spoken about this earlier. We've been positive on a travel services company called Thomas Cook, and we continue to be positive on that company. Unfortunately, in the budget, there was a proposal in terms of TCS being hiked from 5 to 20% for travel operators for foreign tours. However, if one really looks at the numbers, it's only about 15 to 20% of the overall travel services business of Thomas Cook, which comes from this outbound travel tour segment. All the other parts of the business, be it Forex, be it Sterling Holidays, as well as the MICE business, are all doing very well for the company. And in the recent quarter, they broke into the black and reported almost 50 crores of operational profit. So we think this company is well poised for growth in the coming year as well.
Thomas Cook, got that. Mithun, since you mentioned trend, and obviously when you've studied the retail market while arriving at that call, I wanted you to get your thoughts on Nykaa, if you could talk about that. Obviously, e-commerce, a different way of retailing, but at the end of the day, it is retail, right? And I mean, they've got fashion, they've got beauty. The stock has had a one-way journey, 400, today we're talking 150. Your thoughts?
Yeah, actually, it's interesting, Surabhi, because when we were looking at even trend, we were just seeing, Nykaa's valuation was similar to trend, while, the trend's roadmap for growth in terms of revenue growth was much more. And obviously, Nykaa's business model, relies more on the beauty right now, and they're getting into the apparel space. But I think the online apparel space is quite crowded, while, Trend has a unique model, which is more private label. So the margins, the gross margins are much higher. And that's why we like this business compared to the online retail space, which is quite crowded.
Okay, all right. Mithun, what about the IT pack? What's the preference out there? Growth could slow down, but margins could stay protected. If you had to pick from the IT pack, what would it be, large or mid caps?
Nigel, I think, the IT space has done quite well since the last couple of quarters after we saw some sort of a, bottom being made. I think the apprehension was in IT that, the US was going to, go into a recession, Europe as well. Thankfully, I think, the world economy has been buttressed by China reopening. And we actually think things will start to improve over the next few months. And some of these mid-cap IT stocks are trading at very attractive valuations. And right now, obviously, they are cautious on hiring. But I think once you get some visibility on growth, a lot of these companies will do quite well on the mid-cap IT side. One of them that, we've spoken earlier as well, the company called Explio Solutions, which we are quite positive on. This company is just, in the last stages of a merger with its unlisted business in India. And once, this merger is through, the company will, be close to 900 crores of revenues, and profits could be in the order of between 100 to 120 crores. And, they have a roadmap of doubling their employee base over the next 2-3 years. So this is something that we like, it's a debt-free, cash-rich balance sheet. with MNC pedigree. So that's something that we're looking at.
Mithun, any tactical plays to beat the summer heat this time? Either power or cooling appliances, ACs, anything, beverages perhaps?
Nothing comes to mind, Rima, nothing specifically that we've looked at just to play this summer heat wave. But tactically, if you look at something that we actually like, I think play derivatives of beneficiaries of the China opening up. I think people are not taking the cognizance to this. 5% GDP growth in China is quite a big deal from the 3% that they reported last year. And we think actually several spaces, be it beneficiaries of this could be the metal space, even companies, for example, like Tata Motors, which 1/3 of their JLR sales comes from China. I think, these could be tactical plays and beneficiaries of a China opening.
All right, Mithun, always great talking to you. Thank you very much for joining us on the show today. Hope you have a great festive midweek holiday, and we look forward to our next call. By the way, the market is cooling off a little bit, just about 0.6% higher, perhaps trying to lock in some of the gains. We don't trade tomorrow, the rest of the world does. So maybe just digesting some of the good times that we've had since Friday. Quick break on that note. We'll come back on the other side and we'll get you a check on what the dealing rooms are chatting about today. Nimesh joins in with D Street Chatter, and then, of course, the trading calls for the last half hour.
Welcome back. You're tuned in to Closing Bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, it's that time of the day when Nimesh joins us to tell us what is he picking up. Well, Nimesh, tomorrow's a holiday, so some profit taking is what we're witnessing. But in terms of flows, what is it and how are you reading it?
So being a holiday tomorrow, the participation is on the lower side, and that's showing up in the volumes as well. But I guess, the good part is the momentum from last week is carrying on the upside. And, that was a feedback as well, right? There was a lot of pessimism and a lot of fear in the market a week back, and that has actually changed after this whole Adani deal and the fact that some of the mid-cap has bounced back very sharply. So that's helping at the margin in terms of sentiment as well. I guess two sectors which stands out today. One, of course, the technology stocks, largely on back of the big move in Nasdaq. But the sector of the day, to me clearly, is the PSE index and the PSE stocks. You look at PFC, REC, Gail, NTPC, all are buzzing in trade. And there is a feedback that maybe the PSE index is on the verge of a breakout now, and a multi-year breakout. And that's the reason why you're seeing a bit of chase in those stocks. That clearly stands out for me today. From a technical point of view, the next level to watch would be 17,800. That's a bit of a resistance on the upside. So that's the level to watch. But broadly, the participation on the lower side, but looks like the momentum from last week continues, especially in the Nifty names, as well as a bit of momentum in the mid-cap space as well.
Well, Nimesh, participation lower today, but even on Wednesday we could have lower participation because the post-Holi year in Mumbai, and in North India, parts of North India, they'll be celebrating Holi as well. So let's see how that pans out. But you also told us on Friday that there could be a large trade on Tata Steel, and I noticed in the last 30 minutes or so there was a large trade. So let's wait by to see whether or not it was that clean out trade that you were talking about. So what are the other stocks you're looking at?
So Tata Steel could be one stock because that was part of my chatter on Friday as well. So most likely one of the large long only funds seems to be a big seller, and maybe that's the last lot which is likely to could have done in today's trade. But the first stock on my list today is Bandhan Bank. That stock has been consolidating, slightly under pressure in today's trade. But the indication is that could be a large block in Bandhan Bank very soon. So that's something to track as far as Bandhan Bank is concerned. The second stock is Reliance Power. Again, something we don't talk too much about it, been a lost stock, so to speak, but huge volumes in today's trade, and off late there's been a bit of a buzz as well. I believe, the large selling from the lenders of Reliance Power has largely been done with it today's trade, and hence a bit of momentum and a pick up in volumes as well at some HNA. So it looks like some bit of HNA activity is back in Reliance Power. So that's the second one. The third stock is Uniparts, a recent listing, marginally under pressure in today's trade. But the key reason is the anchor lock-in is getting ended today. So close to 22 lakh shares will be on offer for anchors to sell post today's close. So that's something to track in Uniparts. And the last stock is Poonawalla Finance. Again, that stock has been consolidating in a very narrow range of late. And even in Poonawalla Finance, the feedback is there could be a large block deal in that company very soon. So that's the last stock on my list. But the key to watch would be a big block in Bandhan Bank, and as I said, a big block in Poonawalla as well.
Okay, thank you very much for that. By the way, some more gains are being taken off and shaved off. It's 17,705 on the Nifty, which means we're back at that 20-day moving average of 17,703. Let's see whether in the next 15 minutes, by the time markets close, we break and close below that 20-day moving average. But right now, we're hovering exactly over there, and from the day's high, we've lost close to about 100 points. Mitesh, do you think this 20-day moving average will hold out as a support for our market? And if it breaches, would you be a bit concerned?
I think there's also a gap which happened today morning, and I think the 20-day average also plays around that. So my sense is that 17,600 broadly, you might have an intraday vision below that. 17,600 broadly, I think should hold on, and if that happens, then I think we should make one more attempt to get past 17,800, maybe a successful one. Eventually, I think maybe it might take a day or two of consolidation, but the immediate sense is on the positive side. So with that, I have two BTST calls. Coal India is a BTST with a stop at 223, targets of 228 here. And Coromandel Fertilizer is the other one. That's a BTST with a stop at 924 for targets of 950.
All right, Mitesh, got that. Thank you very much for the calls. We hope you have a great holy holiday. And we'll see you again with the markets on Wednesday now. With that, let's quickly move on and take a look at Britannia. What is troubling Britannia in today's trading action? It's down about 2%. And that has been ever since the morning, actually, because CLSA came out with a note on this company. And they have downgraded this to a sell. Earlier, the rating was an underperform. Manglam's here with the details. Manglam, what is CLSA's argument?
Well, CLSA's argument on Britannia before downgrading the stock from underperform to sell with a target price of 4,060 odd rupees is the fact that they believe that there is a downside risk to consensus margin estimates. It will be very interesting to see how the story actually plays out, primarily because, you know, the company's third quarter margins were 19.5% and 1 year forward consensus margins is around 17.5%. So a lot of people have actually factored in some sort of moderation. Will there be further moderation or not is the big question. What does CLSA fear? Higher milk and wheat prices. Well, from the peak, wheat has actually declined by about 32%, and milk prices, while they're still near all-time high, you know, it's accounting for only about 5 to 6% of their overall raw material basket. CLSA believes that going forward, Britannia will, see volume-led growth and not price-led growth. That usually happens when companies don't take price hikes, and price hikes are when, there is some stability in raw material prices. So if that actually happens, then it's a little bit of a conflict out there. The big problem, however, is Britannia's rallied 30% in the last 12 months or so, and that makes CLSA believe that there is further limited room for further upside. Not just that, 39 quarters of market share gains coming in for Britannia also means that going forward, incremental market share gains as per CLSA would be a little more difficult. They've cut their FY23 to FY25 EPS estimates by 1 to 11 odd %, and as a result of which they've downgraded the stock.
Okay, thank you very much for that. The stock is also trading at nearly 50 times forward multiple, and according to CLSA, the fair valuation should be 42 times FY24 PE. Sudeep Bandyopadhyay, the group chairman of IndiTrade Capital, is with us on the show now. Sudeep, as Mangalam pointed out, wheat prices have already come off from the highs that they were, in the recent past. Plus, the street is already expecting margins to moderate down to 17.5% versus current margins of 19.5%. So do you think, there could be even 17.5% margins, that's the consensus margin, is on the higher side, and there could be a downward revision to that?
I think more than margin, whether it's at 17.5 or not, I was a little skeptical on the valuation. I think it has gone up too much, and it has been consistently gaining market share for almost last 3 years. So I think on both these counts, one is it possible for it to move up further in terms of multiples? I don't think so. And is it possible for it to continuously keep gaining market share? Even there, I think the answer is in the negative. So considering these two, some amount of correction in prices, or at least sobering of the valuation was warranted. And I think the CLSA report will bring that, and post the correction, I think it again become attractive. Now, as specifically on the EPS estimates and margin estimates for the next few fiscal, I think they will be under pressure, and competition is also hotting up. With all that happening, I think for them, the scope to increase prices
is limited. They may again gain volume share, but price increase will be difficult. So margins will be under pressure.
By the way, Tata Motors has now taken the pole position on the index. There's about a 3% up move on Tata Motors. The news on the JLR UK sales, that's obviously been well received by the market. There's a growth of about 30% in terms of the UK sales. JLR UK sales stock is doing very well. Sudeep, hi, good afternoon. Quick call on Tata Motors.
Good afternoon, Survi. I think Tata Motors, the biggest question mark I always had was what's going to happen to the JLR sales in China and what's going to happen to JLR sales in UK and Europe. Now that question getting answered as far as UK, the numbers were decent. And as far as China is concerned, I think the Chinese economy is going to go towards a up move, and the consumer demand is going to get stimulated further. So the question mark over JLR sales in China is probably not going to be there. Now, with these two components falling in place and JLR being a significant part of consolidated Tata Motors balance sheet and P&L, I think we should look for some good time. Also, one must not forget that Tata Motors have got their EV strategy right as far as the vehicles on ground and are performing at this stage. A lot of other companies are talking about and planning, but Tata Motors has already done it, and their vehicles are already on ground and getting good reviews. So yes, with this JLR JLR numbers going to be positive over the next few quarters, we can buy Tata Motors at current levels.
Okay, all right. Hi, Sudeep. Sudeep, I want to ask you about the past space. We were discussing with Deepak Shanai earlier about JSW Energy. That one's doing pretty well. The other stocks, NTPC is doing well. If you're looking at smart meters, then Genus Power is up and about. Indirect play would be PFC. Any of these companies you track, and would you like any of them?
Well, Nigel, I do track some of these, but NTPC has been my favorite for last almost 1 year. And I continue to maintain my view on NTPC. This is the largest power utility in the country with excellent forward and backward integration. Also, they have ventured into alternate energy in a big way so that long-term sustainability, long-term growth also is kind of assured. Valuation-wise, also, it does look attractive. It has moved up quite a bit from the levels it was, but still does look attractive. It also pays out dividend. So considering everything, I would probably recommend investors to get into NTPC even at current levels.
Okay, buy NTPC at current levels. Sudeep, do stay on. Need to slip into a very short break. We'll come back and we'll also get in the closing rates. Well, IT's had a good session today. The Nifty IT index is going to go home with a gain of more than 1%. One of the stocks in the IT pack that I wanted to discuss is Tech Mahindra. Sudeep, Tech Mahindra held its analyst day on Friday. While there is still no clarity on who the new CEO is going to be, who will take over CP Gurnani's position from December, the company did lay out some new growth initiatives, the focus on products and platforms, co-creation of IP with its clients. Do you think this will help the company bridge the growth and margin gap versus peers? Because it has been trailing peers on both growth and margins.
Yeah, absolutely right. I think Tech Mahindra, that was one of the challenges, and that's why the market valuation also was lower compared to peers. They have been trying a whole lot of things, and assuming they get a CEO which probably can take the company to the next level of growth, it should be good. We have seen that happening with Infosys post Salil Parekh coming in. Wipro has been trying that many times, may not be that successfully, but I think we have seen the rejuvenation of large IT companies with induction of new management time and again. And yes, Tech Mahindra has some challenges as far as the margin is concerned, and they do need to improve the margin. And that can only happen once they have products and specialized services which the client will demand. So yes, it is a possibility. We'll have to wait and watch how things unfold. The intentions and the direction is right. That's all I would say.
All right, so the final question before we let you go. Everyone's disappointed the markets have come off the top. But one stock that's reeling under pressure from the word go is Z Entertainment. How do you approach this stock around 195? We know there's value, we know it for a long time. But every now and then there's some piece of news that comes up. So how do you approach it?
The noise around the NCLT, NCLAT and the merger not happening is a noise only. And I think it's a matter of time before this gets handled. I think if there is an aggressive investor who can take a little bit of aggressive position, it should be a great buy at these when these corrections happen, sharp corrections happen in Z. The way I look at it, merger is a fait accompli. It will happen. And once it happens, I think the valuation will take different levels.
Okay, got that. Sudeep, thank you very much for joining in today. You have a great Holi, and we look forward to chatting again soon. Thanks very much for being with us. Okay, with that, we're down to the last couple of minutes of today's trading action, and the bulls will perhaps be fairly enthused with this. Yes, some profit taking because we're getting into that midweek holiday, but nonetheless, you're still looking at a solid 100-point move on the Nifty. Sensex up about 430 odd points. Banks actually saw some of the gains getting trimmed off. There was profit taking in the metals part of the market. But if there's one thing that today tells you, it is that the PSU theme is ringing loud and clear. If you're looking at the Nifty itself, then some of the top winners of the day come in from the PSU space. They're cutting across sectoral lines. There's ONGC, there's Power Grid, there are stocks like Oil India, there's NTPC. So it's really PSUs all the way. This government capex theme that we keep hearing a lot about, that's where the money is really moving. Tata Motors, of course, was the index winner, 3% up on some good numbers on UK JLR sales. You had other biggies piling in, Reliance, HDFC Bank, even Axis Bank for that matter. You had the tech titans, Infi and TCS pitching in with gains of about 1 to about 2% on Infosys. Did quite well. Axis Bank was up and about. So really not much to complain. On the downside, Britannia, we've discussed that because of the CLSA report. Profit taking on metals, as I mentioned, Tata Steel, JSW Steel, Hindalco, taking it a little easy. But Rima, I think, it was all in all a good day because we had a lot of movers and shakers in the broader markets as well.
Indeed. So one of the dominant themes was fertilizer. So Mangalore Chemical and Fertilizer, NFL, RCF, pull up all these stocks and you would see some big moves coming through. Apart from that, Adani Group stocks, while we did have a little bit of a wobble in Adani Enterprises and Adani Ports, the others like Adani Wilmar up 5% upper circuit, Adani Power a 5% upper circuit there, Adani Green also a 5% upper circuit, and after that Adani Transmission as well as Adani Total Gas. So all these stocks continued with their buying and an up move. On the losing side, softness seen in Macrotech Developers. Now, over the last couple of days, Macrotech Developers has been seeing big swings in its price and it's been coming on a very large volume. So today, with the decline of 4.5%, Macrotech Developers is now below the 1,000 rupee handle. So it's dropped below its 200-day, 100-day and 50-day moving average. PSU banks came in for profit booking today. So UCO Bank, IOB, Indian Bank, across the board cuts were visible. Equitas Small Finance Bank was another stock dragging lower, while Z Entertainment continues to slide down, 2.5% gone. All in all, for the benchmark indices, the second day of buying, a follow-on rally to Friday's big up move. The Nifty did come off from the high point of the day. The high today was 17,800, but we're still managing to defend the 20-day moving average and close above that 17,700 mark, with the mid-caps moving in step with the frontliners. The Indian markets are shut tomorrow on account of Holi, so we're going to be wishing all our viewers, hope you had a happy, colourful and a safe Holi this time. There goes the closing bell. So we're going to wrap up on this show. From the entire team, thank you for watching. Don't go anywhere. Our special show, Commodity Champions, comes up next.
Powered by LIC.